Morning guys and girls, hope everyone's well. Welcome to another weekly breakdown. So what I'm going to do is run through the markets for the week ahead, let you know kind of a couple of the trades that we placed last week. Last couple of weeks we've only placed 4 trades each week, and that's simply just because I'm not really liking some of the price action. We've come out of every single week in profit for the last, I think, 6 weeks. So last week just ever so slightly 0.5, 0.6 units. Week before 5.7 units, week before that 2.17 units, week before that 4.26, week before that 5.53, and week before that 0.74. So yeah, we've had a very, very good period, about 6 weeks or so, and mainly most recently is I've been very, very selective with the trades that I'm placing. I'm kind of waiting for that confirmation on the markets, especially dollar, because dollar seems to be just wanting to continue its bullish run at the moment. So last week, you might remember, I was looking at this area for the rejection. So this is Monday's trading here, where this line starts and this line finishes. And as you can see, very early on in the week, we had that rejection, we had that push down, but it didn't quite go as far as I wanted, and we then created that lower high, and we actually had some bullish pressure, lower high, and actually then we had some bullish pressure out of that region. So that's why I didn't really touch the dollar until later on in the week. I was expecting us to kind of push down from this region, but unfortunately and especially today, we just want to keep going right now. But as you can see, the levels have worked out perfectly. So we had this level here where we had that initial rejection. Okay, we pushed down, we couldn't break that last low, okay, and we actually went higher, went up to this area of liquidity. We then rejected back down to this level that I previously mentioned. So this is our classic break and retest, and now, as you can see, we've taken out all of these recent highs and the areas that I previously highlighted. So as it stands at the moment, the dollar is still bullish, okay? It's not changing that direction just yet. And the last weekly candle wasn't really what I expected. I expected that push up to here. When it came to, I think, Wednesday, Thursday, we actually started having that breakdown, which I thought maybe we could break this level and start to fall lower. But again, the market just did not want to go lower, okay? Did not want to go lower. And now today's trading is very, very bullish. So there's 2 things happening right now. We've got key levels coming up, okay? This was my area of importance where, as you can see, we held up multiple times. The other thing you have to realize is every single time we break this high, we kind of grab that liquidity and then we fall, okay? Grab the liquidity, fall, grab the liquidity, fall. Now this time we're pushing quite strongly. So it'll be interesting to see how this candle finishes, which is actually in the next 20 minutes. But realistically, this buying pressure is very, very strong. So what I'm going to do is I'm just going to reset the chart again. Again, I just like to do this because, one, it means that I start the week with a nice, clear and precise levels and areas in play. And also it's easy for you guys to see what I'm seeing, so that you can kind of mimic the same thing on your charts as well. So with regards to this part here, we've got, first of all, this 93.4 level is our recent high. And then you've just got to think of what we've got around there, okay? We've got 93.5, okay, a key major level for this market. And where we are currently right now as well, we're at this level where we're at 93, so we certainly could see a rejection from this 93 level. So it'll be interesting to see what happens around here. At the moment, we just have to stay with our bias that the dollar is bullish. But we have to be aware on the weekly, on the daily, we've got this area of liquidity that the market might be grabbing for, might be reaching for. And if that's the case, we can still see reversals. But for now, let's just play the long game and wait and see the reactions around 93, see the reactions around 93.5. So I always like to start the week with just marking out the areas of liquidity in my eyes. And we're already tucking into that liquidity, but to the upside we've got the liquidity here, and then to the downside it's a little bit just choppy up this region here, but I'd say it's somewhere around this level here. Maybe even if we keep pushing higher, this will become our kind of area of liquidity. Okay, so these 2 regions here. So if I was looking to buy this market, I would like to see the market come back down into these levels, maybe even retesting the breakout level, okay, which is here, before looking at those potential opportunities to go long on the US dollar. So waiting for those retracements into this kind of region here, 92.8 down to about 90, let's just say 92.6. And then we can look at actually pushing that market up to grab that top end liquidity that we've got there on the weekly. As pointed out by one of our members as well, it is a double bottom forming on the weekly time frame, as you can see over here on the left hand side. Double bottom forming at 89.9, pretty much 90, which again, we always know that this happens at key levels. Now realistically, are we bullish yet? I still don't consider us overall long-term bullish, because I think this leg here is going to really need to be taken out first. Okay, personally I think this leg here, and also this one as well. Now we might just grab for liquidity, we could then flip to the downside, we could continue to push up to 94s, maybe even 94.5, and then we might start to see rejection. So what we do is we just wait and we be patient, we highlight the areas where we can potentially trade this week, and then we can take it from there. So we've got those two areas that we'd potentially be interested in on the USD, which is pulling down into those regions that we've got marked here. Okay, so dollar, we're going to mark that green because this week currently looking bullish. Now if the dollar is bullish, it could mean that we could see some weakness come from the Aussie dollar as well. So we can start to have a look at what we would expect on the Aussie dollar CAD market. Okay, now last week I did have this absolutely mapped out perfectly. I let you guys know that we probably will reach that liquidity of this 93.193, and then we'll retest to push for this liquidity on the upside, which is exactly what we did. So that's about 75 pips that were available there, and if you were patient and you did wait for it, there was quite a lot of manipulation down on this side. You can see this kind of last spike here before we pushed up massively. If I just go into the hourly, you'll see that a little bit more clearly. So yeah, you can see rejection, nice place to enter, but we just had this big manipulative move, which is around the time of the news coming out as well, which was on, I think it was Wednesday, if I'm correct, and we had that kind of spike just to take out all of these stop losses that would have been sitting under here, and then boom, we fly to the upside, straight to that upside target. So let's just have a clear out, okay, and let's just jump on the weekly and get a clear, fresh idea of what's potentially happening. I'm just going to zoom in for you on the weekly there. So again, we've got this consolidative region. First of all, we've still got these wicks, okay, we've still got a lot of these wicks, which at the moment we've been unable to close above this level, okay, so there is a high possibility that we could reject from here. We're also pushing to the downside when it comes to the moving averages as well, and therefore this could just be another, we've got the low there, we've got a slightly lower low there, we absolutely could see the market reject from this kind of region and head to the downside, okay, we could see that happen. At the moment, we need to go down into the next time frame, which is our daily, and again we've just got this kind of very consolidative phase in this market, but the EMAs on the daily are showing that bullish pressure as well. So it's just this kind of area up here that I'd be interested in keeping an eye on the price action to see if we're going to see any more rejections from this side, okay, and this is, if we were looking to short this market, it would be looking around this region here. If I then just jump into the 4-hour chart, so we've got our daily highs and our daily lows on, etc, etc. Today we've already been very, very bullish, as you can see. We're still pushing higher, but we are going to be reaching that liquidity, okay, we are going to be reaching that liquidity. What we have done though is we've created a low, we've created a higher low, and then we created another higher low. Okay, so we could be pushing and breaking out of this region. We could even be trying to grab the liquidity above this 94 region before falling down. But for now, again, we are currently bullish, but expecting those kind of turnarounds, maybe somewhere around 94, let's just say 94 round figure, up to kind of 94.30. Okay, so my bias on this would be bearish. And that's the kind of moves that I would be looking for this week. So I would kind of leave that alone until I see those rejections around these areas. Looking for things like the 4-hour time frame, looking for bearish engulfings, for example, this one here, nice bearish engulfing. Let me just zoom in so you can see that. Bearish engulfing, retest, drop. Okay, bearish engulfing, retest, drop. Bearish engulfing, retest, drop. Okay, and looking for those again. What do we want to look for next? We want to look for those areas of liquidity. So the liquidity at the moment on this market lies somewhere around this region here, which is around that 94 region. Okay, and then on the downside, we've got the potential liquidity down here, okay, on the 4 hour. So this would be the kind of ideal trade scenario if we can find it, which is actually grabbing the market from the highs at 94 if the dollar continues to be bullish, okay, and therefore looking at this. If of course we do push up, we don't see the rejections, we break through, we can then look at that retest, breakout retest strategy as well. Again, marking those areas of liquidity, we've got this area here around 93. So kind of a nice trade this week might be selling Aussie dollar CAD from 94 down to 93, okay, a good 100 pips or so. But let's just wait and see what happens there. CAD JPY, let's have a look at CAD JPY. So let's just get on the weekly. Weekly looking very, very bearish. Okay, let's just look at those downside pressure, that downside target. So right now we've got these two areas of liquidity. We've got the closure of this weekly candle here, and we've got the actual wick of this candle here as well. So as it stands right now, we are currently bearish, but we're coming into this kind of zone and this region where, again, we could look at those change of directions potentially to occur. The only issue I have with that is JPY is currently following the USD quite nicely, which means that if this is to continue, then we can potentially see this area break. So if I was to be looking at trades on this market, we are bearish, okay, but we need that perfect opportunity, and that perfect opportunity to be selling this market is going to be any retests, okay, as we come into the middle of this week, any retest of this region here, 87, okay, and then actually looking at taking that down 60, 70 pips or so. So that would be my thought process with CAD JPY. Euro Aussie dollar, Euro has been quite strong. Euro has been quite strong, okay, and as you can see on the weekly, we are now above EMAs. We're testing EMAs, which is good to see. Some strength coming through on Euro. We've got these higher highs and higher lows creeping in. We've got a big grab of liquidity there on the 4 hourly as well. We've come back down to this region last week. We created a new higher low, and again now we've made those new highs. So Euro is quite strong, okay. Euro is quite strong right now, and the one thing I think I always just highlight these areas that I find important and areas whereby I want to be focusing on is this kind of low here. Okay, this kind of low here. So we broke this low on the weekly. This is obviously weekly time frame, so we're talking last year, and now we've come back up to kind of retest that breakout zone. So I would be cautious. Okay, I would be quite cautious about buying anything up here because it's quite high, and therefore the kind of opportunities if the Aussie dollar does see some weakness and some strength, and Euro does see some weakness, then potentially we can look at these levels 6100, 6150, 6050 to start seeing rejections of price. And again, what do we need to do? We just need to highlight the areas of liquidity. The first one is around 1.5880, so a big old drop potential there if we were to grab this lower side liquidity, and even bigger down here as well. So this is obviously quite optimistic, but that's what I'm seeing at the minute. So but for now, again, currently bullish. So don't just look at selling it because it's high. We need to be patient, we need to wait. At the moment, the buyers are still in control, okay. So let me just change this. So this is overall bullish, okay, overall bullish, but I'm just highlighting those areas of interest. Overall bearish for CAD JPY, as you know. And for Aussie dollar, it's kind of hit or miss, but we're at a key point, so I think it's important to just keep an eye on that one and focus on that one for this week ahead. Now, I highlighted this last week, and I actually explained this one perfectly in terms of seeing the market push out of this consolidative range, and if it does, we could come back and have that kind of retest before we then make a new leg higher, okay. And we had pretty much exactly that. We retested that region 1.47 on the nose, and then now we've just skyrocketed to the upside. So again, Let's clear the charts. Let's have a look at what we've got on the weekly. We've got this area of liquidity here. We've got this wick of liquidity here. Also, I always like these kind of candles, okay, this weekly candle. The one before we had that big drop, okay, and as you can see, we're now pushing into that region. So we just need to be careful that although we want to trade with the trend, we're quite high in terms of the current trend. So if we are going to trade with the trend, we need to get these pullbacks. We've already broken out of this high here. Bear with me. We've already broken out of this region, this recent high here, and therefore this now becomes a key point, a key level, which is roughly around that 1.49 level. So if you were to look at buying and actually continuing the trend, this is the area of value, okay? But if we were looking for sells, okay, we've got round figures up here. 1.50 I'm sure is going to be quite important. 1.5050, 1.51. But at the moment it's bullish. Would I just jump into the trend? No, I wouldn't. So as it stands, it's bullish. So let's go Euro USD. Again, let's just clear this. Okay, so Euro USD. At the moment, we had this area highlighted last week, and as you can see, we've tapped into it again. And with the USD strengthening, if that continues, we can probably see us grab for liquidity. Okay, and that liquidity is on the wick and is on the body. So it's somewhere between that 1.70 and 1.170 and 1.1750. So they're the areas I'll be interested at looking at. On the downside, we've broken that low again. We're creating lower highs, okay, and lower lows, as you can see. And therefore, with what I'm seeing at the moment, let me just draw a trend line. I don't use trend lines that much. It's kind of something that I just kind of see visually as opposed to using them. But we've got that downward trend line, okay, we've got that downward trend line. So we are at, again, this one for me isn't as important because we're still pushing through it now, so I'm going to delete that. But these areas here, this kind of 1.1760 down to here is where I'd be interested in seeing this market fall. So if we were to look at actually trading this market, we would want to look somewhere around this region here, maybe even retesting 1.18. And then actually looking for those short positions around there. Again, always match this up with the rest of the synchronization that we teach you in the course. We want to focus on these areas when we've got other things aligned, of course. So yeah, overall bearish, as you can see. No one can doubt that. We've also got this potential kind of either head or shoulders, if you want to call it a wonky head or shoulders, or a double top formation here as well. So we could be breaking this liquidity and actually heading for the next level of weekly liquidity, which is around this region here, okay? Which is quite a drop, as you can see, 1.1640. So if the dollar continues its strength, then we can actually see that market come all the way down into this region here. So Euro USD overall bearish. Let's look at GBP Aussie. So as we can see, it's very clear and obvious that right now we are currently bullish. We've taken out this liquidity. We've kind of broken out of it. We've retested it. We can probably see that a little bit better on the 4 hourly. So we broke out last end of the week before and last week, and then we came back and we retested that level to pretty much absolute perfection. So it's still bullish at the moment, okay, it's still bullish. GBP Aussie dollar is still bullish. GBP is quite strong. Now, area of interest for turning around, if we are going to do that, or at least having a bit of a relief on this market, would be this kind of candle here, which actually is going to push us up into the 1.880. So it's actually going to push us up into that kind of region. So if the GBP does continue to be strong and the Aussie dollar does continue to be weak and we don't see any change around, and at the moment I don't really see it changing. I see us kind of coming up here to meet 1.87, 1.8750. Okay, that's what it looks like to me. If we jump onto the hourly time frame, again, just look at the structure. Okay, we've got this low, we've got this higher low, we've got this kind of region here as well, which is also been tested once or twice. And then boom, off we go again, lower high created, higher low created, sorry. So I think even pushing even further up here into the 1.87, 1.8750 region is a massive potential on this market. If we ignore the wicks, we could potentially see this kind of trend line break retest here as well. So if I was to look at buying this, actually this is just quite an intraday sort of position, is I'd just be highlighting the liquidity which lies above 8650, but I'd want to see that market come down into this region here. It's a very short term position. See the market pop down into 1.8630 and actually take that 30, 40, 50 pips up there. Then move stops to break even if you get this entry down here, and then you could potentially ride this all the way up to 1.87, 1.8750 would be those next kind of key levels, and maybe even 1.8750. So looking quite bullish on GBP Aussie dollar right now. GBP USD is obviously looking bearish, because what we've got going on right now is the USD strength is coming in. So again, look at the weekly. What have we got going on? We've got this area of liquidity. Okay, let me just draw these lines on for you. So we've got the body liquidity there, and we've got the wick liquidity. Okay, so if I put those both on, you can see we're dipping into those levels right now. So even though overall we're bearish on this market, we're just way too low to even consider jumping in on this trend just yet. We need to see that market coming back, maybe retesting 1.3750, and then we can look at actually continuing that move and taking that move even lower, okay, into that region. But right now, as you can see, it's just too low. It's just a case of jumping onto a trend, trying to catch a falling knife, etc., etc. But that's the area of interest that I've got there for that. USD CAD, okay, USD CAD is absolutely flying, and it will do so because the US dollar is strengthening. So where are our areas of liquidity? Okay, we've got these kind of areas up here. So I think we'll be reaching for 1.2850, okay, 1.2850 on USD CAD. We are pushing, there's no stopping us whatsoever right now. 1.2850 is a nice key level. It's also that liquidity that we might be looking to grab. And again, same as the previous analysis on USD pairs, buying now is just jumping into, you know, a rising market, and it's not a sensible thing to do. We need to look at where the areas of liquidity are, where the market could come back to if we wanted to jump on this trend, which is here. Okay, so unless the market was going to drop 130 pips, then we can consider potential buys. But also if it drops 130 pips quite quickly, it's going to be quite the rejection. So I prefer the just watching the USD CAD, but right now bullish. Okay. And then Aussie dollar USD. So if the dollar continues to be strong, what we can expect from the Aussie dollar, and also this is one that played out perfectly last week as well, then we can expect this market to actually start turning. And if we look at the actual structure here on the weekly, okay, on the weekly we've actually broken the EMAs, and now we've come back and tested them really, really nicely. Okay, come back and tested them really nicely. And if we actually have a look on the daily, this kind of 1820, 1830 level, it sits in quite nicely with this candle here. And I always explain these candles because this is the candle before we had a big strong move, okay, and you can see that we've come back into that region, and then we've done a morning star pattern on the daily. So I think we've got some further downside pressure coming on that. Again, let's look at the liquidity. The weekly liquidity is quite low, 1760, so about 450 pips, okay, on the weekly liquidity. As we look at the daily, it's kind of the same, so it would mean that coming down into this region. I'd also have this level here, 1783, okay, because this is where that consolidation occurred. But yeah, certainly I believe that if the dollar continues to be strong, we'll be looking at seeing this market drop down to the 1780s without too much issue, and then maybe even trying to grab this low side liquidity of 1760 as well. If we look on the hourly time frame, actually let me just change this to the 4 hourly time frame just so it's a bit clearer and a bit cleaner. Just zoom in. Where is the liquidity? Okay, where is the liquidity from the downside? We've got a couple of these kind of areas, okay, and the main one is this one here, 1794. So I think this is our first stop, okay, 1794, especially once we break this level here of 1800, which is obviously a key level. But yeah, I think that's kind of where we'd be heading on gold this week, but currently bearish. My bias on this is definitely going to be bearish. I think we've come up to a key point. Look at the liquidity that we grabbed here as well. So we've got that one and we've got that one, okay. We've come up, we've broken highs, and then we've started distributing, okay? Then we've got push, sell, push, sell, push, sell, okay? And now just literally in almost free fall kind of style on gold. So I think we will be seeing this market come down into 1794, 1780s, and then maybe even, if we do have a really strong dollar this week, maybe even pushing into these 1760s. And then finally, let's have a look at DAX. Okay, so DAX has actually provided some weakness. My analysis on this last week, or I think it was a week before, because I don't think I analyzed this one, was absolutely bang on. We pulled up to this level and we rejected quite strongly, pushing straight into this region. And now we have taken that liquidity to the upside, but we're also have just as we speak pretty much closing below these levels here of 15,300. Okay, so next level of liquidity, let's just have a look at the daily on this one. So you can see right here 15,158, you can see this level here 15,083, and all of these are pretty much just around that 15k level. So I think we are going to be revisiting this 15k level. Now the one thing when it comes to DAX, okay, the one thing when it comes to DAX is that DAX is one of these markets that you, for some reason, you always seem to believe it is great opportunities to sell, okay? Obviously this area here is COVID, okay, when COVID started in February, March time, when we had that massive correction on the market of sort of 45-50%. But ever since that, okay, every single time that we break EMAs, that we look extremely bearish, we just seem to recover. Okay, and again, we've taken out all liquidity, we've made brand new highs, absolutely rocketing on this market and other markets as well, obviously other stock markets and major indices. But no matter what happens, is every time, okay, I can go back to this kind of region around here. So I don't know why the mouse has been. So we pull down, looking extremely bearish. Grab that liquidity. Look at the perfection of that liquidity there. Okay, literally within 0.73, within 20 pips, okay, of that closure liquidity, we then flip to the upside and make a new high. Okay, and the amount of pips on offer is absolute madness. 800 pips. Okay, again, had that bearish move come down. Liquidity lies probably, I'd say, just below this kind of level here. And as you can see, again, what happens, we fly and make new highs, 570 pips, okay? And this happens so regularly. Every time you think that DAX or an index is extremely short, apologies for the dog, is extremely short and it's looking quite bearish, things just tend to flip to the upside, okay? Even again, right here, broke structure all the way down, okay, massive move of sort of 500 pips or so, and then we just fly back to the upside, okay, and retest those highs again. So even though it's looking extremely bearish, okay, I think it's always smarter to be actually buying DAX or buying indices at valuable prices, okay? So somewhere like this for a long-term position is great, because there's a potential 500, 600, 700 pips on offer to reach the highs again. And even if we get further down here into the 15,100s, 15,100 and 15,000 levels, again, to me, that's just great value to buy, especially for a more longer term trade and aspect. So guys, I hope you find that useful. I'm not too sure how long this video has gone on for, but I've gone through pretty much everything for you. Germany, I've highlighted that in yellow because, again, like I said, it is looking bearish right now. I wouldn't want to buy just yet, but it can change very quickly, and it's just about trying to identify that perfect opportunity. Okay, for example, when we had this drop here, we pulled down. Let me just zoom in. When we had this drop here, we pulled down, then we obviously had buyers come in really strongly. We came back, perfect Fibonacci. I haven't really spoken about Fibonacci too much because it's kind of one of those things that I just look at and can kind of see with my eyes, but perfect Fibonacci down to the 61.8, and then boom, bullish engulfing, and then you've got a huge trade potential there. So you just need to look at the lower time frames when it comes to this market. When you've got that bullish engulfing there, you've got a potential 50 pip risk. Back to liquidity, 307 risk reward, okay? absolutely massive opportunity. But you do need to be patient, and you need to wait for those perfect opportunities if you're going to look at buying this market, because it can move very quickly. So guys, hope you find it useful. As always, send me your comments, send me your thoughts, and yeah, let's have a good week.